The Hedgeless Horseman here. It's May the 5th, 2025. Been a few days since I put out the video. I'm actually soon leaving for a couple of conferences. I'm leaving on Saturday, I think. So I thought I would maybe get a few videos in beforehand, even though I have a lot of things to do before, well, in time for the trip. Anyway, first of all, thanks to the sponsors. Let's look at metals. Gold up $80, not too far off from up $100. Silver up a bit, copper is up a bit, oil is selling off, which is good for the miners obviously. Markets seem to have started down but are now up. The funny thing again is, like, I mean, when gold, and this just goes back to just pointing out some, let's say, stuff that 2 days ago, I guess it was 2 days ago, like around here, I saw plenty of calls on Twitter. It's like we're probably gonna hit $3,000, maybe 2,800. Some said 2,600, and it just goes to show that's how people act. And remember, there's like on Twitter, for example, everybody's making money and everybody knows what's the right thing to do. The thing is that almost nobody actually makes any money on Twitter, not over the long term. Even the worst investors can have the best years. And yeah, I mean, bad investor. I mean, some of my best years were when I didn't really do or know much about mining, but I had, good timing, or lucky timing, I should say. Was in a bunch of kind of trading sardines, and the sentiment really took off. But my point is, there's like, this is how it's always going to be, and it kind of felt like that actually. I mean, just 2 trading days ago. So I've been expecting gold to have a serious correction all the way since, I don't know, 2,300 at least. Was like, okay, yeah, didn't really corrected for a while, went up, corrected for a while, and here you had people calling for 2,000, went up. I mean, it's like, I'm talking more, big corrections, let's say, but so far they've all proven to be dips, and just a few months later gold has actually been higher. But every time it happens, and especially since, I mean, by the look of it, if you zoom out, I mean, gold is kind of going exponentially in a sense. So, I mean, it makes kind of total sense. I mean, I'm paranoid myself. The trick is that I don't actually do anything about it. My case, or no case of any junior I own, is that this is a buy unless gold corrects to 3,000 or 3,800 or something like that. I want them to be cheap even if gold goes down to those levels. And the main thing is that I think they could create value. So even if gold goes like this, they could actually create enough value that I might be up over that time period. If gold goes up and sentiment comes around in the junior sector, I might be up a lot instead of just up. And an interesting thing from a monthly perspective, I mean, this I assume is like the kind of the epitome of indecision in a sense, like up a lot, down quite a bit, and then closed, in the whatever around the center. So it's like it looks like an market that is undecided, and all of a sudden this month we had a bit of a drop recently. Now it's up, and of course we're only on May 5th, so there's a lot of left for the left of May yet. But right now, if it closed here, it would form some kind of a hammer, so basically a shakeout in a sense. And in this, I mean, the previous month it shook out people to the upside and then to the downside, falls. Well, I guess it actually ended up here, might have gone down here, traded up there, but closed down here. My point is that what everybody cares about is trying to guess the next move in anything, basically. And I have feelings and guesses where something might go, but I have never really traded based on that fact, and it has apparently, served me quite well. Because I don't know how many times. I mean, again, it's like I would think this was the start of a correction. Here, I wouldn't be surprised if I felt it was gonna go lower. Same here. It looks like it's rolling over. Yada yada yada. But if I would have traded on those feelings, I would have sold every single bottom, and maybe bought every single top. That is the funny thing. It's like soon. I mean, today people are talking about all-time highs again, going towards all-time highs. Why? Because we're up, and if you extrapolate this direction, it's going to take you to, at least the recent all-time high. If you extrapolate this downtrend, well, it's going to take you down to 3,000. So that's just how it works, and it's bloody hard not to let that affect your strategy. But of course, most people have no long-term strategy. Most is momentum-based short-term strategy. So in that case, I mean, it's kind of your job to, I guess, try to guess that. It's just that it's so extremely hard and almost nobody makes money, because everybody tries it and almost nobody makes money. Anyway, so I'm just pointing that out. It's like I have no idea. I'm not ridiculing the people necessarily that, we're going to go to 2,600, 2,800 or 3,000 as the next stop. Who knows? Maybe we'll get there, or maybe we'll have a new time high. I have no idea. I'm just pointing out the fact that everybody has opinions. Everybody's sharing their opinions, but it's like statistics would show that almost nobody actually has a strategy that ends up making them any kind of money over the long term. So basically, almost every opinion you're gonna hear is, in practical terms, trash. And of course, especially since if you have a strategy, that's one thing. But just plucking some, let's say you owned a long-term case, you think it's very cheap based on the potential news releases that's going to come out of this next 6 to 24 months, and you sold it because some people on Twitter said, gold is going to go lower in the short term. Well, is that dumb or smart? Well, you bought it from a long-term investment perspective, and that case would still be intact even if gold went down here, or even if gold went down there, etc., etc. I don't know how much gold would need to go down before some of the better projects actually are starting to look overvalued, but we're very far away from that. This was news item today. 13 security guards kidnapped from Peru's Poderosa gold mine were found dead as illegal mining violence escalates in Patas. I don't know where Patas is. I think I googled the Poderosa mine. It doesn't appear to belong to any international famous mining company. Maybe it's a private company, maybe it is a state-owned company in Peru. I have no idea, but I just thought I would mention this as an example of I mean, obviously part of this is a result, I would think, especially escalation like this, because of where the gold price is. Because this Poderosa mine is probably having fatter margins than it's ever had, and it's apparently been running since the 1980s, and there's been 39 people that have been killed. I don't know if it's exactly at this mine site or in the area, but I mean, obviously you wouldn't have, let's say, illegal miners or whatever wanting to take control of a gold mine if they didn't think they were gonna get something from the gold mine. Today, more than maybe any time in the last 40 years, you would profit the most on a gold mine. So, I mean, if we just, look at at face value here, it's like people are willing to kill for the chance of controlling / owning a gold mine today. Yet if we look on the TSXV, for example, gold mines are kind of given away. Even a lot of the producers are kind of given away, that they're not even representing how much they're making at today's gold price. And could gold go down? Of course it could go down, but some of those producers also have a bunch of other projects that you get for free. So there's, I mean, this is, let's say, FOMO enough that people are willing to kill for, whereas like you could easily, it's kind of ironic in a sense that's like people here are willing to take to violence, willing to kill for ownership of a gold mine. And sure, of course, I mean, in a sense, killing is somewhat free. But it's like, I mean, just to go to that length, and obviously, I mean, there's, I guess, chance of military coming in there, and the ones doing this could also get killed because they met security guards, yada yada. So, I mean, let's put it like this: there's a lot of risk to all of this, just to try to own a gold mine. And I mean, coming back to the ironic thing, I guess, is like if these guys would have capital, they could just kind of invest in gold mines instead. And sure, it wouldn't be like they got it for free and reap all the benefits, but they sure are cheap right now. So I just find that interesting. Whereas like on the TSXV and the Western investors, they're giving gold mines and future gold mines away. Where in places in Peru, people are getting killed because they own the gold mine. Nobody's forcing anybody to sell their ownership in a gold mine on the TSXV, not that I'm aware of. So it's kind of means legal quote stealing. I just found that interesting. This, I thought I would actually play this clip because this is like, I mean, 2 minutes of priceless common sense. This is probably a clip one should basically watch once every day, at least.
People with their stocks, they think that the stock knows more than they do. So that when the stock goes down, they say the stock is telling them something, And what's selling me is I can get more for my money. but they take it as kind of a referendum on themselves, and it's me versus the stock. If it ever gets back to what I paid, I'm going to sell it. The stock doesn't care what you paid. I mean, you have to remember, the stock doesn't even care that you own it. You are nothing to the stock. That stock is everything to you, And you remember you paid $10.13, and therefore the stock should get to $10.13 before you sell it. The stock has no feelings about you. I hate to disillusion you on this, but it just doesn't care. And so the only question with every stock, every day, and you don't do it this frequently, is can I get more for my money someplace else? You've got a chance to be in thousands and thousands of great businesses, and their prices change all the time, so their relative valuations change. And you can make the exchange at very low cost these days. Commissions are nothing. And so you can always shift from one business to another. You have a huge advantage over Andrew Carnegie. When he was in the steel business, or Rocker was in the oil business, he could not shift over immediately to retailing or something like that. You can rearrange your business empire, which you own through that little portfolio that you have. You can rearrange that, at a moment's notice with practically no cost. It's a huge advantage, which people turn into a disadvantage. There is nothing about the price action of the stock that tells you whether you should keep owning. What tells you whether you should keep owning it is what you expect the company to do in the future versus the price at which it's selling now, compared to the other opportunities of businesses you think you know equally well, and make that same comparison. And that's all there is to owning stocks.
I mean, he pretty much sums up the way I go about investing. And I'm just happy. I mean, it's like I watched a lot of Buffett, read a lot of Buffett, so it's like, it's not like I came up with it, but I'm just happy that it's like, okay, within 2 minutes he kind of summarizes my key investment ideas, and I mean, points out the fact that people take the share price direction, let's say, as due diligence. That the market knows something, and he's saying that's like, no, if something goes down, it only means it's cheaper it's going on sale. That's all it actually is saying. And the opposite is of course also true. And then he says, you know, what's only really the focus of his, what is this stock slash company, what could it be worth in the future, and then compare that, what price am I paying today, and then he comes up with, you know, if it's a buy or a sell, not where it's going to go in the short term, how the trend looks, yada yada yada. He's looking out there in the future. I'm buying this company 2, 3, or I mean in his case 40 years out today. He's buying this company X 40 years in the future, or whatever your time horizon might be, for the price it's being sold at in the market today. That's only the thing that's interesting to him. And then he looks what is the best risk reward within his circle of competence, and that basically means, I mean, that's what I like to call value shuffling. I always want to have my portfolio. I mean, you're never going to be perfect, of course, and you can't like shuffle every position or anything like that any given day. And he doesn't even, you know, expect you. He's saying it's like you don't necessarily. I mean, you shouldn't do it that frequently. But it's like, okay, I want to be, if I can, in the cases that have the best risk reward in terms of what the price is today relative to what they could be worth in the future on a risk reward basis. Some will have, you know, maybe they could be 100% more valuable in 2 years, and that's a high chance of that happening. That's a low risk, good return, very good return. Or there might be, oh, I have no idea what this is really going to be worth, but it could be worth either -50 or up to a -100, or 500% more, 1,000% more. But it's high risk. Maybe the probability of that is like 15%, 20%, whatever. That's also risk reward. Yeah, I just think it's good to hear it from, you know, the horse's mouth, the king. We also saw Goldfields will acquire Gold Road Resources in a deal valuing the Australian miner equity at 3.7 billion. I think this is the third deal Goldfields have done in the last few years. I mean, they obviously acquired Orestone Mining not too long ago for $1.6 billion. Again, I think this just shows that, I mean, I look at Goldfields, I mean, they look smart, they're aggressive when few seem to be aggressive. Because it's not like it's raining M&A out there. But okay, this looks more like, you know, a Agnico type situation. And I mean, obviously it says something when they've already done a, you know, billion-dollar deal not too long ago, and they're doing a new multi-billion-dollar deal. So they're making a statement, obviously, and they're obviously aggressive. So it's just good to see. It's like, again, I don't know if Barrick has done any moves in the gold space in the last 8 years or something. I mean, it's kind of crazy. I mean, I hope it pays off for Goldfields. I mean, once Windfall is in production. So, I mean, they're building up their pipeline, I guess. I don't know much about Gold Road, so I can't really say. I mean, probably they're buying production, but I obviously think this is, you know, still cheap. Otherwise, they wouldn't have bought it. One thing I was looking at that's kind of interesting. I've been playing around a bit with ChatGTP, their new model 03, I think it's called. So I asked, for example, ChatGTP is like, if you were a gold miner, had a gold mine, in what Western jurisdiction would you get to keep most of that, let's say, operating profit or pre-tax profit? Where would you make the most profit on a gold mine? And it spat out this top 10 jurisdictional list. Actually, if you include, I think, the royalty, I mean, there is something here, but the first results I got were that Sweden was in fact lower than Finland if you accounted for the royalty, and I don't know why this. I mean, here you have some sliver of yellow, but yeah, in the first ranking Sweden was actually lower. This corporate income tax was true, but if you counted for the Finnish royalties, Finland was actually second and Sweden first. I mean, since I am invested in Sweden and Finland, I think this is incredibly interesting. And I've never really thought much about this because I go back to what I stated before. I used to not really care that much about production or the second wave of the Lassonde curve because the gold business tend to be pretty crap. And the juniors tend to speculate on, they have, in terms of real value, they have to have a really good project for it to make money at, let's say, much lower gold prices during a full cycle. But now the more I'm invested in the more advanced juniors, the even some producing juniors, the development juniors, or the producers with development projects, for example. And if I'm taking an even more actual, long-term view as my, let's say, portfolio gets a bit bigger, so you kind of have to plan more for the, for the long terms. Like, what's the terminal, let's say, value? That's how I like to actually think about cases nowadays. What's the risk reward if I never sold this company? Because there's a lot of there's a lot of people on Twitter and what have you. It's like, short-term pump crew, let's say. Where it's like the case is simply to get somebody else to buy it higher and then you sell it. It's like as quickly, the quicker the better. It's like if you can get something up within 1 day, that's great. Then you can make a 1 day's return, that's whatever it is. But let's say that the story is actually bad, you have no idea what the risk reward is, it's not actually a long-term play, it has no merit really. That's like, let's say pumping and dumping crap, where it's like it's actually not worth much. But I like nowadays to think of, what's the true risk reward or long-term risk reward, because the longer the time, the closer to intrinsic value something is going to be expected to trade, right? It's going to oscillate throughout this whole time period, but it's like if the value of a company goes up over the next 5 to 10 years, you would expect the share price to be in an uptrend over the next 5 to 10 years. And in between, 90% of the time, it's going to be correcting or consolidating, right? And that happens in a gold bull or a gold bear. So when I think about that, it's like, okay, if I again was an owner, it's like you couldn't really flip paper, let's say. You weren't interested in necessarily, greater fool trading sardines, etc. It's like, what's the actual value of something? Obviously, corporate tax rate comes into play. If I have a business, if I pay lower taxes in one jurisdiction compared to another one, my business is going to make me more money and thus be worth more to me as the owner, where I'm paying less taxes, right? So it just, I find it quite interesting. It's like, of all the Western jurisdictions, it seems that Sweden and Finland are the lowest taxed companies for a gold miner. And I think this is the top 10. I'm not 100% sure from. I'm pretty sure that's what I asked it. I'm just surprised that it's already 34.4%. Or maybe I asked the best jurisdictions and then to rank them. But regardless, Western Australia, obviously a huge mining jurisdiction. Nevada, the biggest, I guess, or maybe it's Arizona. In the US, Ontario, Canada, obviously a lot of gold mining going on there. And it's like, when you look at it, it's like quite a big bit of a difference, like almost 50% higher tax rates for gold miners, let's say, in Ontario, Canada and Western Australia. I had no idea, it was such a difference. And then I just asked ChatGPT to, like, okay, how do you translate this to, ASIC equivalent number in a sense? So I asked it to do that, and it basically has Western Australia as a, let's say, base case benchmark. So in Finland and Sweden, for example, it's if you have I think they used in this scenario, looking at a gold mine, I think they used a AISC level of $1,500 or something, and then looked, okay, how much more profits do you get out of a mine in Sweden, Finland, Norway, and Nevada compared to the Western Australia? And what does that equate in terms of, I mean, how much lower cost must a Western Australia gold mine be for it to have the same profits being thrown off to the corporation or the shareholders as some of these other jurisdictions? So in this case, like, and again, I think Sweden is actually number one and Finland is number two when you include the royalty, but let's go with these numbers. So Western Australia gold mine would need to have a 263 lower AISC per ounce cost than the same mine in Finland for it to be as profitable and worth as much to actual shareholders. That's quite interesting. Or another way to put it is that a Finnish mine could have 263 ounces AISC cost per ounce higher than the same mine in Western Australia, and they would still throw off the same amount of net profits from that mine. And I actually ended up doing a bit more calculations. I don't have them up now. Just looking at, okay, if you take a Canadian mine, I looked at Young Davidson, and I just asked ChatGTP, okay, take the Young Davidson mine but put it in Sweden, exact same cost and all that, and you know, how much more worth would it be in Sweden? And it's a material difference. So again, if we're talking really long-term perspective, obviously the tax rate on your record earnings that's going around now in the gold space, that has an impact, right? You as a shareholder, if you had to own that project or deposit forever, you would get more out of it in lower tax jurisdiction. And of course, there's also the potential where it's like, well, some country has lower tax rates but higher costs. So in practical terms, yes, one mine would make more net profits in a lower tax jurisdiction, but the costs in that jurisdictions are higher. So in essence, maybe they're, you know, kind of the same thing, that yes, you'll make more net profits as a percentage, but you have higher costs, so there's less pre-tax profits to take from. That might be true. So I mean, in reality, you would want the holy grail is kind of low cost jurisdiction with low corporate tax rates. That's where you get absolute. I mean, if anywhere you would want to have a mine and be a shareholder and owner, meaning like where could you maximize your net profits and potential dividends, etc., that would obviously be in a low cost, low tax jurisdiction. That mine is going to be worth more than the same mine in another place. So I just think it's an interesting thing to consider. And of course, I mean, I didn't really have a good grip on this, but like, does it matter for, let's say, an acquiring company? Yeah, I would think so. It's like, because they have obviously financial models and they're running a business, etc. But Nevada, I mean, understandably so then, that, I mean, you can see why it's also so, I mean, high ranked, not just the geology and, you know, pretty good permitting regime and all that, but apparently it might be the lowest tax, at least mining jurisdiction in the US. 24%. Wyoming is not that much higher really, but like South Dakota, that's another 5% of your pre-tax profits gone to, well, in taxes and royalties. And I had no idea Ontario, Canada was up at 33.9. So I mean, that's quite a big difference. So if you had to pick, you would, again, if you wanted to make the most on a given gold mine, you would want it in Sweden or Finland to get the most value out of that asset. And in addition, going back to, you know, this news here, 13 killed in Peru kidnappers, like, if you get the most amount of value of a mine in a certain jurisdiction from a financial standpoint, you would obviously also be very keen of keeping that asset. Because let's face it, you could have the lowest tax country, even, I mean, let's say you go into the third world or whatever, and I don't think that's the case, but let's say it's even lower cost, lower taxes than Finland and Sweden, but there's a chance that your long-lived gold mine is gonna risk being taken away or something, or invaded by illegal miners or nationalization or whatever. Then the question is, what is the long-term value? If nobody obviously knows, but if you have a 30-year mine life or 20-year and it gets taken away from you in 6 months or 6 years, even within 6 years, even if you had, through the life of the mine, you would get even more in that jurisdiction, but you lost the mine in year 6. That's obviously a huge problem. So you would also, in a sense, be kind of okay to, I guess, pay more taxes to be in, safer jurisdiction where you at least get to keep all the mine life profits. But yes, you pay higher taxes on it. I mean, the holy grail would be where you would get to keep the asset, plus you get to keep the most profits out of the asset. Let's look at some news. Actually, I was just interviewed by K Report, where I talked about some of these news items where I talked about some of these news items. So Altamira announced maiden resource estimate for Mera Bonita Porphyry Gold Project, Cajuru District, Brazil. 24 million tons, 0.46, 357 ounces, 1,000 ounces. And total inferred resource of 25 million tons at 0.44 grams per ton for a total of 362,000 ounces. So a bit over 700,000 ounces total resources, calculated using 0.2 grams per ton cutoff grade, and that looks reasonable given that this is near surface stuff, and the metallurgy appears to be great, and the strip ratio is, I think they mentioned 0.5 to 1. So if this can be heap leachable, I think that makes a lot of sense. Almost any project would make money today anyway, right? So, and they also have Mera Bonita is the first of 9 porphyry properties. So they have a combined global resource now across Mera Bonita and Cajuru Central of 1.4 million ounces. So that's between the resource here, which is still wide open, and Mera Bonita, which is still wide open and open at depth, and this is also open at depth. And then they have a bunch of other targets. Stock didn't care really at all. It's actually down. Not super surprising in a sense. Okay, why? Look at the 2-year trend, 5-year trend. Do you think people are excited about this chart? I would say absolutely not. Does this track the fundamentals of the gold price and the, let's say, the in situ value of the ounces, or the value of the company in a sense? I would certainly not think so. Gold has gone like it's gone like that. Plus now they have 1.4 million ounces, twice the amount they've had at any point in time within this chart. So you have a record high gold price plus 100% higher absolute resource base at a time when gold price is at record highs. And still, even a good gold day, even a resource estimate, a doubling of the global resource, down 0.5%. Going back kinda to what Buffett said about the price doesn't really suggest anything necessarily, then something is on sale in a sense. But hey, okay, and I've talked about this before. Can you explain it from a market psychology perspective? Yeah, I would think so. Again, not a lot of people are excited about the trend, so there's certainly no FOMO because it's going down. Now it's like a FOMO in reverse, fear of being in a sense. and also that the market like looks at companies like, okay, they don't have that much in cash, so regardless of what they have in the ground, almost regardless how many targets they have, that they have 9 more targets, like the market is thinking, I think, that, well, this is not going to be tested until you do a raise. That's what the market is assuming. This is not going to be tested. You can't prove that potential up. There's no risk of me being out of the stock and them making a bigger discovery or expanding any of the projects, whatever, or doing anything really, because you'll have to do a financing to do that. That's what I think the market's perspective is. That's why has been the case for several juniors, where it's like the project has not gotten worse, even maybe better. But if the market just focuses on one thing, and that tend to be, dilution is such a scary word for a lot of people, that tends to be the front runner. And especially again when there's no drilling going on right now, and the market sees that, well, there's not much money that they believe the company has to be able to drill, then it makes sense. Plus, it's not really 60 ounces, 0.44 grams per ton. I mean, even though compare this to having these kind of grades in the Yukon or somewhere, where it's like, okay, bad infrastructure, gonna be a bitch to, probably uneconomic, yada yada. Compare that to, it's like, hey, this is Brazil, this starts near surface. There are plenty of examples of low grade, let's say, heap leach mines working, both in Mexico, Brazil, Nevada, etc. And Nevada, I would say, is a higher cost jurisdiction. The infrastructure here is actually very good. Power lines, yada yada. They're working, I think, on their environmental permits. So I would want Altamira to kind of do the Cabral route. Try to get this advanced and get into low capex production as quickly as possible. Because then, if they're able to do that, it doesn't matter as much how anemic or depressed the market is. If the market is pricing 1.4 million ounces at 22 million market cap, how do you punish the market from doing that? Well, it's kind of hard, and at the same time, it's like, does it make how much sense does it make to, I don't know. You have to basically impress from exploration standpoint to make any create any FOMO, let's say, in this market, or have a very tight share structure. Basically, there's everybody that owns the stock, no one is selling at these prices, so there's no shares for sale. The only change can basically be somebody new, buying it. So it can only really surprise to the upside. And we see that in some Canadian discovery plays right now with very tight share structures. They have kind of performed well, because, okay, something changed, it was for the positive, few are selling, so little buying actually takes the stock up. But they are also not, let's say, somewhat mature shorts or projects like this. It's typically, a new discovery, let's say, and some of them might have actually been down like this, but something happens and every weekend is gone and all of a sudden it pops. But that's kind of what I think, like to see, because again, I'm talking about this, ounce in the ground to ounce out of the ground valuation difference, where it's like, okay, if you can buy an ounce in the ground for $20 or whatever it might be, if that ounce out of the ground would fetch you a $2,000 margin, I would want to close that gap as quickly as possible. Even if, let's say, you dilute it by anything by 100%, so you take up the price to ounce in the ground to $40, let's say. But you still get $2,000 ASIC margin if that ounce is coming out of the ground, or $1,500 or whatever. It's not going to trade at that level anymore, right? Then you're kind of punishing the market. It's like, okay, you were able to buy ounces too cheap, quote, too cheap, and then I actually put that into production. So I'm directly benefiting from the fact, which is a fact, that gold price is at record highs and gold margins are record highs. But if not, I mean, any project is never gonna get into production, then it really doesn't matter what the gold price is, because that's never gonna get monetized unless it gets bought out. And we know Aura Minerals is a shareholder in Altamira, and they only care about production, and they have mines in Brazil. So they would know what looks to be mining worthy in Brazil, right? And that was way before gold hit record highs. And we have, you know, analogs like the big Kinross operation. Sure, there's economies of scale, whatever. But I would think this could make quite a bit of money today. But it's not sexy. It's not sexy at face value. The cash flow could be sexy though. So who knows? I mean, I since they did a resource, maybe this is, you know, the first step to doing a PA or something like that. But my I was gonna say whole point. My base case is simple. It's like, okay, at this market cap, given what they just published, given what they have, their assets, their projects, and they have more projects than these two deposits. They have 9 targets winning just let's say flagship projects. Like, are there stuff, you know, fun stuff could happen to the upside, you know, from 22 million market cap? I would think so. I mean, it's kind of priced like this is never going to get monetized. They have nothing that's going to get monetized, etc. But if they're able to do that, yeah, I think this is going to look quite cheap. On the way to get there, that probably means, I mean, I don't think they would fund any, you know, near-term or possibly near-term production from just that. So it's like there would be dilution. But again, is that good or bad? I mean, heck, throw on whatever amount of dilution. It's like I had a debate on the First Nordic Forum not long ago. It's like people, oh, you know, imagine if we need 100% dilution or something. It's like, well, if I can buy something worth like 2 billion today, and I pay whatever 100 million or something for half of that, that's a steal all day. I'll take that dilution, you know, any day, because from a price to value perspective, you just got a 90% discount. Yeah, still Altamira. Also, Goliath Resources engages EDS Energy Mining to forge plans to drive an exploration at its shorebed discovery, gold digger property, yada yada. Drill out high-grade shorebed lodes will be more easily and cheaply facilitated from underground vantages. Underground access to the Bonanza Zone will enable geological confirmation of this important high-grade lode and potentially enable bulk sampling. Goliath looks forward to mobilizing shortly for its aggressive 2025 drill campaign. And this is also one I recently talked about at K-Report. And what's interesting about this, and I mentioned this before, both before the last drill campaign, the last drill season, and after the drill season where we saw the 50% haircut. So it's like Goliath has been putting out some of the most impressive drill results in this sector over the last couple of years, right? Pretty much all zones, I think, are still wide open, and they're finding new zones, new parallel veins, pretty much every field season, and they just discovered that their reduced intrusion rock appears to be gold bearing. So who knows, maybe there's even a bigger price at depth as well. So point is, if you have some of the most, you know, impressive assay results coming, it was not a big shock that's like, okay, they were able to keep providing that in the last drill season, and the stock did really well on the back of like really good drill results. And that was kind of in a sense the theme. It's like I simply think, because after every news release, the market is not gonna think it doesn't matter how good these results are, the next news release is gonna be a race. No, because I think we're drilling 35,000 meters or 37. So they just kept on putting out really good assay results for months, and the market knew that they had money. It's like there's no race coming because the drill season is not over, etc. Maybe, I mean, that seems to be have been the game plan for a lot of people, because as soon as and also they pressed the promotion front. As soon as the news release came and said that these are the last assay results from the last drill season, now we're going into, quote, the boring period. Stocks sold off heavily. And again, I talked about this. I think that was a lot of, again, people who were playing that angle, which worked right up until the last assay results. A bunch of, let's say, weak hands and a bunch of people, or, weak hands / hot money, whatever you want to call it. A lot of traders knowing there's a lot of momentum, weak hands, yada, yada. And then obviously I would think that shorters, etc. piled on. And then people were also thinking that, well, they're probably going to have to raise before they start drilling, which is not the case, because they did some raising, including with McEwen Mining, although they got shares in that transaction. So they have, I'm pretty sure they have, money to start the drill season and start to making the threat of putting out even more good assay results. And that's going to get the, make the stock exciting again. And then it's, easier to finance, let's say, the balance of the drill program, the drill season. Plus, who knows? There's always the chance or the risk that they're gonna make a new discovery, hit a whammer of an intercept, yada yada yada, and a lot of people might throw money at the store, etc. So if they do this, and they could basically, I think they said, enable a longer drill season at the project. Consider if they could pretty much almost drill it year round or something like that. And especially when you account for the lags of assay results, then you kind of short circuit. Then you won't have this, exciting drill period, chuck 50% down because now nobody thinks they can get rich overnight. And then the next drill season starts and it ramps up again and chuck, etc. Yes, if they keep creating value, I would expect the trend to be higher, the share price to make higher highs and higher lows, yada yada yada. But if you can short circuit that kind of boring to exciting period, where there's almost only a exciting period, that might make it even more fun to hold, in a sense, which might attract even more people, and you won't have these kind of whiplash sellouts. Of course, with that said, volatility is the poor man's dry powder. Because, it's kind of a gift that Goliath can, given how good the results have been, that the market is still so, let's say, momentum-driven, short-sighted, and there's so many traders that you can have a totally intact story sell off. That's like what? Okay, high to 287, low 160. Okay, big sell-off. Maybe not exactly 50%, but a big sell-off. And another dip here, actually. So this, okay, so low, what would that be? Low 130. Yeah, so 50%. 50%. Nothing changed for the project. This was just one news release. But that news release was so charged, in a sense, given how the market functions and works. So here you paid up to 2.87, and down here just a few months later you paid down to 1.31 for pretty much the exact same project and at a higher gold price. That obviously opens up some opportunity. I can buy an intact story, no ounce has gone astray, and I could buy it 50% lower than it was here. So regardless of if this was a buy or not, obviously this would then by definition be a much better buy, because it's much cheaper, so it's pricing in less, which means less risk and more upside in case the story is indeed intact. But this is obviously what most people curse this market for, because they're more likely to believe the bullshit of the market. It's like, oh, things haven't gone well, so I better sell low before it goes even lower. And then turn around, and now it's working its way up, and we're nearing field season again. So I just think this, again, Goliath is one of the best examples of, let's say, irrational volatility. And if they do have it that there's actually an exciting period throughout this whole time, yes, the ride might be much, well, quite a bit smoother maybe when you avoid these, boring period sell-offs. But at the same time, that means that these opportunities might also go away, that you won't have that much of an easy time, let's say, buying value that's unchanged or higher for much lower price, thus jacking up the risk reward immensely. Also talked about K2 Gold. Final 45-day public comment period begins for permitting at K2 Gold's Mojave project. I think exploration story pretty much needs to be exceptional if it's let's say a pure exploration. One second. If it's a pure exploration project, because this is early stage. This is an early stage project, but it does to me look like there's some exceptional exploration potential. Again, that's what it looks to me. Because they have copper, you can look at the presentation, they have copper, gold, lead and zinc and silver anomalies as well. And as he writes here, John Robbins, the Mojave project is one of the most outstanding exploration projects I've ever been involved with. And sure, yes, you can say that, well, everybody says that, maybe. It's like, oh, it's very promotional, yada yada. While that is true, I doubt, I'm not sure, I haven't looked at every one of his quotes, but I doubt you say something like this without it having any meaning, let's say. It's like, oh, this is actually a run-of-the-mill shitco project, but I'm gonna go on record saying it's one of the most outstanding exploration projects. And even Chris Taylor of Great Bear fame, who's an advisor to the company, who's actually the one that I think got his hands on the project in like 2013 or something, but then obviously ended up with I don't think they could do much work then, because this is California, that's been the thing. And then obviously Great Bear had a huge success at one of the best success stories at its Dixie project. But he's been on record saying there's like, if this wasn't California, this project, there would be a few mines on it already, or several or multiple mines, or whatever he said, which kind of suggests something about what kind of exploration potential he believes there is there. And of course, again, one thing is saying it, but that's the thing. I'm not saying that there's a guarantee these guys are correct. I'm saying I believe them when they are excited about the exploration potential, that this might actually be a case with exceptional exploration potential, because that's what I kind of need to see in a early stage explorer to take a punt today, or it's got to be just absurdly cheap, let's say, which I'm gonna get to soon. So it says here, opening the final 45-day comment period on the project. So if I understand correctly, if they get a green light on this, let's say, I guess that's the DEIS. If they get this, which it looks like they're probably gonna get it, and the BLM seems quite positive to them getting it, that they're basically behind it, because as it says here, supports the secretarial order unleashing America, yada yada. So it's like, oh, this rhymes with that, so it's like this should get the green light, let's say. And who knows if there's going to be comments and how long that's going to take to sort that out. I don't know. But it's my understanding that if they get this is a very big deal. It's not just, oh, we're getting a drill permit to drill a few holes. That to get up to this stage is a major de-risking, even up to the point where it's like for potential, let's say, future mining activity, that this is a big step towards that as well. That it's not that much of a leap to actually get be able to mine it later. I mean, take that at face value. I'm not an expert, but that's my understanding. We could actually, should we look a bit on the... see here. Yeah, so it's part of the Discovery Group. Quite a few warrants out though. Unfortunately, I don't have any warrants. Mojave project. So here's basically the flagship asset in Mojave project in California, and it's kinda in, I mean, mining country. I mean, biggest reason I think there's more stuff in Nevada is because it's in Nevada. But to the south you have Castle Mountain, Waterloo, Golden Queen, and Pine. Molly, molybdenum and whatever, tungsten maybe. But here's the gist of it basically, and this is a pretty big property. So 5 gold near surface high grade oxide targets. One huge one here. I mean, look at the scale bar. This is their target here is like what, 5.5 kilometers. Here, there, and here you see like 200 plus historic mines and workings. And I've talked about this before. The belief is that there's a intrusion, maybe the source of everything here might be here somewhere. So it kind of paints an interesting picture. You have a bunch of historic stuff here, a bunch of historic stuff here. Not much historic mining here, but you have like really big targets. Well, here's some historic mining actually, but this was like artisanal mining most of the time, I think. Well, historic mines you see here, one here, a bunch of them up here, and you have all these let's say target soil anomalies and chip samples, whatever. I doubt if the source is down here. It's like I doubt it. The mineralization jumped from here to here, and for some reason there's nothing here, despite the fact that you have all these big anomalies. So this looks like quite action-packed, if you know what I mean. Like, and this jives obviously. I mean, one can have an easier time understanding why Chris Taylor said, well, if this, if this wasn't California, there would be multiple mines here already. It's like, I mean, his logic, I guess, being that if this was Nevada, where you would have an easy time being allowed to explore it, this would have been explored already, and they would have found a few deposits that would be good enough to bring into production. And here's from the gold zone. This is from the dragonfly zones, where you have like 51.8 meters, 1.2, 62.5 meters, 1.4, 86.9 meters of 4 gram per ton. I mean, obviously remarkable stuff starting from surface. Dragonflies here. They have the Gold Valley target up here, where they found gold numbers up to 375 grams per ton. And this, I think, is basically where most of the work has been done. And this is a 1.5 kilometer stretch, and that's the Dragonfly, and it can keep going obviously quite a bit south as well. Soda Valley, copper and silver, 500 meters here. Good results. I mean, especially since I would think that most of this stuff would have been leached from its copper. Cerro Gordo target, this is up near the historic mines. I mean, this is very interesting from the standpoint where it's like you have bonanza grade silver with high copper bonanza grade silver and high grade gold and high grade copper. And here you have gold, bonanza silver, high grade copper. Here you have gold, bonanza silver, high grade copper. And this is like, I don't know, 1.5, I'm just gonna, yeah, I mean 1.5 to 2 kilometers from end to end. And here you also have high grade gold and high grade copper. High grade gold, bonanza grade silver plus high grade copper. And this is just, again, one of the many targets. This is Cerro Gordo. Yeah, so that's up here. So this looks like a very interesting target in itself. This is where they drilled the high grade gold. Here you got a copper trend. Stega, I'm not 100% sure what. They don't have much here on the Stega. There's so many targets you kind of forget about it. And one thing to notice, there's been majors prodding this project. Rio Tinto was in here, Newmont Mining was in here, and back then you couldn't really do much. They drilled some holes and had some good historic drill holes. Then SSR Mining had I think an option on it or something, but they weren't able really to do any work as far as I understand. They didn't drill a single drill hole, and I don't think that's because they didn't see any geological potential. I think because they didn't see any path forward. And I think that's, as far as I understand, that's the reason why Newmont and or Rio Tinto also kind of walked away, where it's like, okay, it doesn't matter what we find here really, why put more money in the ground here, because at the time I think it was also like part of a, I don't know, protected land or a park or something. So basically, even if you find something, odds are we can't do anything. So then it obviously doesn't matter really what you find. I mean, just look at Resolution that's been in permitting for 20 years. That's a world-class deposit, and still it's, I mean, if you account for that's been stuck in limbo for 20 years, I mean, that's some cost right there. Would they have drilled that back then if they knew for sure that's not going to be permit ready for 25 years, let's say? I doubt that. They would probably want to, see what it have, if it's worth holding on to, but would they have, how much money would they have spent if they know it would be dead money for at least 25 years? That I don't know. But yeah, I think it's kind of, again, I like these stories where it's like, I have no idea what they're actually going to find. I mean, it's a good group of people behind it, good backing, one would think, because it's in the Discovery Group. The so far results look obviously promising. The size of the targets looks promising. Bunch of different metals. I mean, it just simply looks like there's a huge amount of fluids that gone through this area here. Are they gonna make a world-class discovery? Are they gonna find a deposit worth mining, or 2 or 3 or 4? I don't know. Nobody knows that, but I believe that there's certainly, exploration potential where if one, let's say, bought it at May 5th, 2025, comes back in 2-3 years, things could have gone well, let's say. If not, the downside is always 100%. But it's not pricing in that there's for sure the exceptional exploration potential for sure is going to prove to be true. It's going to turn into exceptional exploration success as well. That is not priced in. That's what makes it interesting. Kingfisher announced a 7 million broker private placement. Yeah, I'm going to try to participate in this one. They have a bunch of copper targets in BC. I like Dustin, the geologist. He seems to be a non-stop worker. And obviously 7 million is not a little amount for a 16 million market cap company. So I think that speaks, that's a good sign. There's quite the appetite for these projects that is not really reflected in the market. So there's been obviously, you get half a warrant as well. It was like $7 million, $7 million, let's say, on the sidelines that appears to be, and who knows, maybe they upsize it, but then some kind of a ballpark of the amount of money that actually likes the story. And believe me, you couldn't really buy $7 million worth of stock in this in the market here without driving up the price maybe 300%. Orestone Mining, I've talked a little bit about this before. It's one of the few micro-cap companies that I thought looked interesting. And I was very happy to see that ORS announces 600,000 non-broker private placement and shares for debt settlement. Crescat Capital LLC becomes strategic shareholder. I think this might be one of the only times that I'm actually in, especially a microcap company, before Crescat is in it. So I mean, this speaks volumes to me, because I mean, it's easy to get paranoid when you find something trading for, you know, a couple $1 million basically. And I talked to the company, and their new I think it's Francisco, the new Argentinian project is called, sampling at Francisco Gold project. Yeah. These are trench results, if I remember correctly, 52 meters, 3 grams per ton, 110, which are, I mean, kind of exceptional. So in my view, which I wrote in the forum and I've talked about before, it's like, okay, this looks, I mean, you don't need that much of gold here. I mean, if the metallurgy is okay, if the grades are somewhat okay, I mean, especially if you can heap leach it, you don't need to have a lot of gold, right? So potentially a low capex project, and this, if I'm not mistaken, is kind of on a ridge, so it's basically the kind of geometry you would really want. So the strip ratio is very low, that the deposit, I mean, you don't have a lot of waste. So it's like, at these gold prices, what if you find 500,000 ounces of like very economic gold here? Or let's say push that to 1 million ounces of very economic gold, where it's like low capex, low strip ratio. I mean, obviously it should turn out to be great economics if those things are true at today's gold price. So, and who knows? I mean, what? Let's say it takes, I don't know, 20-30 million to put into production, and it has an NPV of like 700 million or something. Today's gold price. I mean, I'm just making up numbers right now, but that's the beauty of it. It's like, do I expect this to be one of those exceptional discoveries, that this could be a tier 2 or tier 1 project? That is absolutely not my base case. The base case is that this could be a small, maybe quite profitable mining operation that has the financial, let's say, metrics that would absolutely make sense to put into production. Like, you know, pretty barren area. I think there's actually a road to the project, which is obviously great. So it's not really, you know, necessarily that remote. So if you find, you know, 500,000 to 1 million ounces here, again, good grade for, let's say, heap leach operation, all that. I mean, I would expect this to get mined one day in that case, you know, if it's, you know, permittable. And for, you know, sub 5 million market cap in that case, yeah, I don't need tier 1 type discoveries, because again, the trick is then, I mean, I wouldn't like any small project that's not worth putting into production or could get put into production, because then it's a trading sardine. And if it's actually a, you know, relatively good project and nobody, let's say, buys it out, then you would still need to put it into production yourself to monetize it. And if you need 400 million to put in a crappy project into production, then I'm not really that interested, because then you can't finance it yourself, yada yada. So this is one. I mean, this is kind of a, you know, junior-sized project in that sense, and it's interesting. I mean, the people involved, I mean, they're kind of impressive. It's like, you know, founders of I even forgot what the this is up to the Q2. So here we have David Hotman, for example, a founder of Eldorado Gold, Visionary Metals, and ALTA Pacific Gold, acquired by McEwen Mining in 2007. So everybody knows about Eldorado Gold, of course. Visionary Metals, I don't know. I don't remember Nevada Pacific Gold, but it apparently was acquired by McEwen Mining in 2007. And here you have Eldorado Gold, VP Greenstone Resources, let's see, those guys I don't know. Founding team member of Eldorado Gold and Bima Gold, which was acquired by Kinross. Gary was also the chief geologist of Polaris Minerals. I don't know who they are, but I sure know who Bima Gold were. Guanajuato Silver, Chairman CEO. So you have, it's like, I mean, people with some pretty impressive resumes, and especially if you're a founder, let's say, of some, I mean, today mid-tiers or even majors, I guess. I mean, that tells you it's like these guys should know how to actually convert, let's say, an exploration asset to a mine, or build a mining company, let's say. That was kind of convinced me to actually take a position in Orestone, because I mean, if you have a, I don't know, sub 5 million market cap and you have founders of Eldorado Gold, etc. on board, I mean, kind of almost feels like you have to pay attention. So I think it's hitting quite high in terms of people relative to the market cap in a sense. So that's gonna be interesting to see what happens here. Again, this is more, I'm not gonna say pure lottery ticket, but it's like I think the case is pretty clear. If there is indeed, if they can drill up and prove there's like whatever 500,000 to 1 million ounces of very economic gold potentially at this property, I think it's okay. That's not the one. I think $5 million is going to look very cheap. If we, take it really long term, and who knows? I have no idea, how long I will be holding the stock. But let's just, and I need to actually reconnect with them soon. I think again, just to because I would be very interested if these guys were interested in actually. Starting a new gold company, if you know what I mean. It's like, okay, we'll start with this asset, maybe could get into low capex production, get cash flowing, and grow from there. That would be cool if you're, on board of a. I'm not saying another Eldorado Gold, but if they even have the whatever vision, maybe they don't. I don't know, but again, when I see, if Quinton likes it. It's sub 5 million given the context. Yeah, I mean, to me it's a no-brainer punt, but I'm not betting the farm on this. This is one where it's like either it's not going to turn into something, and the upside case that it actually turns into something, and all of a sudden it's maybe trading at 30-40 million market cap, and if it really turns into something, could be higher than that, obviously. So that's about it. For Orestone. Irving Resources encounter broad shallow intro of gold-rich silica. The OMI updates progress at East Yamagano. Not surprisingly, the market doesn't care that much. It's like, oh, okay, silica. I mean, who in this sector really knows anything about smelter flux material, for example? But if we just look at the numbers, it's like 100 meters of 1.34 AU equivalent. I think the deepest, it's a 100-meter hole, starts at surface, but I think it ends at like 35 meters or something like that, if I'm not mistaken. I'm pretty sure that's the case. Where did I get that from? Oh yeah, here, okay. 35 meters below surface. So it's like potentially from surface to 35 meters down, you have like silica flux material running 1.34 grams per ton here. And there's one spot where it's actually like 2 meters. So that's when I assume they hit a vein. But that is quite impressive. Yes, it's not sexy per se, but that might be very, let's say, economic, because I would think that they get paid for the silica and keep 95% of the gold content, and 1.34 AU equivalent, and they get 95% of that. I haven't done an NSR on it, but yeah, I mean, who knows? I again, I don't know. I'm not a silica flux or smelter flux expert, but imagine if you could get paid based on the host rock, and this would come for free, let's say. I mean, then you have basically maybe it's not, maybe the silica itself, maybe it's not gonna fully cover it, but I would think so. Again, not 100% sure. I'm waving a bit here, but it's like, imagine, because if you have this kind of material and it basically has no cost, because it's all 95% of this is free credit. In that case, you're mining what, 95% of 0.34 that you're getting at an all-in sustaining cost of 0. So it's all profit. Yeah, so I mean, this is very interesting. And one thing to note is, like, I know it's not the sexiest thing. I mean, the Yamagano target is very sexy. But if you think about it, like, what if you had X amount of million tons of 1 gram per ton smelter flux, and I haven't done really any calculations. I think they mentioned that in maybe a previous news release, but it's like, if we're just thinking here, it's like, couldn't that be kind of nice if you have, let's say, a few million tons of like 1 gram per ton silica rock, and you get all the precious metals for free? I mean, even if you had a small operation like that, and let's say you could run it for, I don't know, let's say 20 years at a given whatever, it's like, at what point does the market cap, I mean, you wouldn't, let's put it like this, you wouldn't need to make much per year from silica flux operation to make this look cheap. Especially, let's say you could have an operation for that timing, or with whatever throughput, etc., going for like 20-30 years or something. Not a perpetual, like, cash flow machine, but it's like, I mean, almost a mom and pop operation, but it's like as simple can be. It's like you're digging up bulk silica with gold and silver in it and selling it in bulk. No processing plant or anything like that. And you capture 95% of the metal in the smelter flux, or you get 95% of all the precious metals from the smelter. I wish I had a clear vision of how this could play out. Because let's face, I mean, if there's, imagine you could foresee, it's like, with almost no capex, maybe you could, let's say you could even borrow whatever, you round it up to like 20 million CAD, and you could get a smelter flux operation up and running. Let's say you could theoretically get 3 million in net profits per year out of that for like 20-30 years. I mean, that would actually be kind of cool. But I'm not in a position where I can say for sure one way or another. I think what I think though is, I think this is a material news release. I don't know exactly how material, and of course at the end of the day the most important thing is how material is it to the valuation. Was this news release, I mean, is that worth like 10 million market cap, or is it worth 5 million? Is it worth 0 million, etc.? that's what I don't know it enough really. But I would not be surprised if, yeah, this is a materially positive news release. Just looking at it, it's like anything really 1 gram per ton that starts at surface is kinda, well, in a lot of contexts is material. Even if you're talking like a heap leach thing, 1 gram per ton near surface, like a sheet of 35 meters deep or whatever, it's like, yeah, that's all, or let's say mineralization. But in this case, where it's like, well, you're actually making money or breaking even, let's say, on the host rock, so the 1 gram per ton doesn't have much in terms of cost to it. Then it's like, I mean, how many heap leach operations have that? Most heap leach operations, I guess, have a recovery of like 70%, and the host rock is waste. Yeah, anyway, something to think about. I wish I knew. I should probably think hard about it, because you never know. It's like some of these juniors, especially if there's unconventional news, it's like, I mean, this is a sleepy stock as it is, but it's like, you never know when there's actually a very material news release and you're kind of, glossing over it because it's like, I don't want to take the time to actually figure it out, and then it's like, sometime later it's like, oh crap, I mean, I should have put in the work. It's like with this Discovery Silver, it's like, I'm kind of mad at myself that I remember seeing the news announced about their takeover, and I'm like, I saw the deal value of like, several hundred millions and something like that. It's like, how cheap can it be, or whatever. And now it's like, actually, okay, it has helped that gold has gone up so much, so that surely has helped. So you can't look at all this like, I knew it was going to go up here. Well, nobody knew gold was actually going to go on an absolute tear either. So some of that is like, you're getting much more, free cash flow at face value today than you got back here because of the gold price. So some of this makes sense. That's like hard to foresee, but still, I wish I went back and took a good look at what their play was, because like I said, I mean, it kind of looks like they're doing magna mining of gold mining, and they have good people involved. So it's like, hey, I think magna mining is a long-term no-brainer. It has been for years, and I can see it being that. I mean, I can see the hodl folios having magna for 5 years or more. Maybe Discovery Silver is such a case, and if I appreciated that early on, I might have seen it as a no-brainer here. But now I'm, added for the hodl folios at these levels, and think that I might have missed, an even bigger opportunity, let's say. Anyway, thanks for listening. Consider me biased as always, not buying or selling recommendation, and with all cases, like as soon as, like, if any company, let's say, goes up a lot in price and value hasn't really followed, you shouldn't be surprised if I sell some. You know what I mean? Because I do that value shuffling myself if I can. And again, it's like with any one of these, is like I have no idea what's gonna happen with K2 Gold or Kingfisher or Goliath. I have my ideas. Altamira, Orestone, for example. I'm not betting the farm on any one of these, but I can see, the case for it. I can see the risk reward, and that's why I am in all of these. But that's the thing. I don't want to, for example, it's like, you're gonna get a 30 bag in Orestone, so buy it now, and I'm just sitting there ready on the sell button. It's like, it pops, it's up 20% today, for example, and it pops like 100% in a day on me doing something, and then it's like, okay, I'm taking that money off the table. Okay, now Irving is okay. I thought it was up even more. But I hope you get my point. It's like always, let's say for your own sake, no, assume I might buy or sell at any point. So like you have to see the cases and know why you're invested, let's say, because you can't expect anybody to give you, oh, you should sell now and or you should buy now and then sell at whatever price, because news change, opportunity sets change, prices change, yada yada. You might find a new case, whatever. So like have an idea. You cannot borrow conviction. That's the thing, I guess. Yeah, so thanks for listening. Hope you have a good day and talk soon. Bye bye.